Hi guys, welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Wednesday morning and a good morning at that, given the fact that we are staring at some very positive cues coming out of the Asian markets, Wall Street, and of course, there's good news on, on the US yields front as well as US 10-year yield has eased off further from 16-year highs. GIFT Nifty hinting at a start above 19,800. Officially, the second quarter earnings kicks off with TCS reporting its numbers today. We'll be talking about that. And of course, we'll also be talking about the Realty Index, which has, in fact, rallied quite a bit yesterday. In fact, the index is now at a 15-year high. So we will be taking stock of realty stocks as well. And of course, we'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we'll try and take them up as much as possible. But before we go any further, let's take a look at the top headlines at this hour. Wall Street extends gains as yields continue to ease from 16-year highs. In fact, investors will be watching out for minutes from the September FOMC meeting and the producer price inflation numbers that are due later today. Asian markets surge after a positive handover from Wall Street. Nikkei edges higher while Kospi surges over 2%. The GIFT Nifty, as I mentioned, is hinting at a reclaim of that 19,800 mark. And of course, the CLSA upgrade is also something that will buoy sentiment in today's session. Oil prices fall slightly, but Brent continues to trade around that $88 a barrel mark as investors remain cautious over the demand outlook. Concerns over potential supply disruptions from the conflict in West Asia also fuel caution. And IT bellwether TCS kicks off second quarter earnings today as it reports numbers, and of course weakness is likely to continue with soft revenue growth. However, Street in fact is awaiting management outlook on demand and share buyback announcement as well. Stocks in focus today. Bank of Baroda has been barred by RBI from onboarding new customers for its mobile app. Meanwhile, reports also suggest lack of consensus and differences over pricing of the deal could derail Cipla's $7 billion stake sale plan. Well, let me first bring on board our technical expert for today. Joining me is Hemen Kapadia of Choksey Securities. Great to have you on the show, Hemen, as always. I would like to understand where you think the Nifty will be heading from here, given the fact that we staged a very good comeback yesterday after the knee-jerk reaction to the geopolitical tensions that we saw on Monday. I remember on Friday when we were having a chat, you had said that, now that Nifty has cleared that 19,600 mark, the downside looks limited from here. In fact, we have only moved upwards. And, would you say that a dash at 20,000 could not be ruled out as the earnings season progresses?
A very good morning to you, Nandita. Thank you for having me on the show. It's always a pleasure. Yes, I think so, Nandita, because what has happened is we saw a formation of a island reversal, and that has held. More importantly, we didn't go to 19,250, Nandita, which was a very strong medium-term support. And if that hasn't been tested, breaching is one part of it, but if it hasn't been tested, that it also means the undercurrent is better, and we've also formed a higher top, higher bottom on the daily chart, Nandita. And like you mentioned, Brent is a pullback. I don't think it's a rally; it's a recovery. And like you mentioned, the dollar index, I think 105.50 is very important. If we close below 105.50, it would have given a downward breakout from an upward slanting channel, and that would augur well for equities, commodities, and overall market, because we've been seeing last 15 days has been continuous FI selling. So somewhere we could be seeing some relief coming in. The VIX is okay. Only if it crosses 14 would be slightly worried about. So the setup seems fine, and yes, I totally agree with you. 19,700, 19,852 and 19,992, one after the other. But yes, I think once again we can say that we can train our sights on 20,000, and yes, that seems to be back again on the horizon.
All right, 20,000 back on the horizon. But let's talk about TCS before the earnings. Hemen, of course, after a good sort of up move coming in over the last 5 to 6 trading sessions, yesterday there was a bit of caution ahead of numbers. Of course, Street is waiting for that, a crucial buyback announcement. But ahead of the earnings, how will you position yourself in a TCS now?
Well, frankly speaking, like you mentioned, if you look at the Street estimates, the results aren't going to be exactly great. So somewhere maybe that has already been built in. Many of the IT stocks have corrected a bit from the highs, but TCS has staged a comeback. The setup is promising. In the sense, it's one of the better looking stocks. Infi was one of the weakest IT stocks and the mainline stocks. It's playing catch up now. But TCS didn't go down much. 3660 is important resistance and 3500 is support. So, but the setup, if I look at the short term, medium term, and long term, Nandita, the charts seem positive. Some of the oscillators have given a crossover buy after 1.5 years. So, frankly speaking, and there's a higher top, higher bottom on the monthly chart also. So, everything seems to be suggest. Yes, I would be cautiously optimistic, not trying to double guess the results, but the technical setup has distinctly improved. And as of now, if I were to shut my eyes and ears to the results which are coming, I would say the setup seems promising. And if we take out 3660, further upside seems possible. But on the downside, if 3500 doesn't break, I think that would add some more confidence and saying that that's a cushion and we don't see that breaking.
All right, 3,500, crucial support for the stock. But hold that thought, Hemen. We'll come back and talk about other stocks as well. Let me also bring on board my colleague Debangana Ghosh, who tracks TCS very closely to understand what the street is anticipating and what the poll is really throwing up for TCS this time around. Debangana, great to have you on the show. Take us through what the estimates are looking like and what is it that the street will be watching out for in terms of the management commentary this time around.
Right. Firstly, Nandita, thanks for having me on the show. Just to begin with, over the last couple of quarters, the performance for TCS has remained sort of subdued, not just TCS, but the overall IT sector. So I believe this quarter, all eyes will be on the management commentary on whether the worst is behind for the IT sector. Going by Accenture's numbers, recently looks like discretionary spending is yet to see a revival. Just to shed some light on the kind of estimates that we're expecting. So according to Moneycontrol's poll, revenue is expected to go up by 1.5% quarter on quarter, and profit after tax is expected to rise by around 3.12% on a quarter on quarter basis. What makes this quarter also stand out is the internal restructuring that took place. And given the kind of a tough business environment that we are in at the moment. And this is also like a major restructuring which happened since the new CEO, K. Krithivasan, took over. So under him, the BFSI sector, which he was heading and which accounts for nearly 40% of TCS's revenue, that has been split into between two vertical heads and depending on the geography. So would look forward to what's more happening there in terms of the internal restructuring and how the company is approaching that. The second area is, I think, the deal wins. So TCS, not just in Q2, but overall in 2023, TCS has been one of the strongest IT companies in terms of mega deal wins, which are like above 500 million and so on. So this quarter also, we expect TCS to have a strong order book, which is going to surpass its guidance of, I think, $7 to $9 billion. But going by analyst estimates, street estimates, it's going to be in the range of $11 to $13 billion this quarter. The other area is the management's commentary on North America too will be closely observed, because North America, being one of the largest key markets, has remained sort of muted for TCS over the last few quarters. The other important thing would be the hiring trends. So last quarter, I think amongst the top IT companies, only TCS was the only company which had a positive net addition of some 525 or 523 employees. And TCS is also the only company which has sort of given a hiring target of 40,000 freshers. But given the tough demand environment, we will look for an update whether TCS still stands by those fresher hiring numbers, or is it going to update that. The other major change that TCS did recently was mandating 5-day work week for certain teams within the company, which in a way signals that probably the era of work from home is going to get over for the IT sector. Now, this thing has sort of sparked an industry-wide debate and concern among employees. So how
Right,
strongly
how-
is TCS going after it is something
Right.
we'll be look forward to.
Right, Debangana. With that, thanks a lot for taking us through what, the money control poll is throwing out and what we should be watching out for from the management commentary as well. Of course, look forward to touching base with you later in the day as well. But from the IT sector, let's shift focus to the realty sector. Of course, that has been on rock solid ground. Of course, yesterday, the realty index has hit a fresh 15-year high. In fact, even on Friday, if you see, after the RBI policy, the index was up over, 3% or thereabouts. But Hemen, I remember on Friday when I spoke to you about the realty index, you had said that there is a double bottom formation and you were sounding very optimistic. So 15-year highs, that's where the realty index is placed at, and 40% up move on a YTD basis. Which are the stocks that you like in this space?
Absolutely, Nandita. I think we have some way to go. It's been a prolonged consolidation, Nandita. So, frankly speaking, this is, let's say, the risk of sounding overly optimistic. This is just the starters. The main course and dinner, the dinner and the dessert is still left. So, looks good. Coming back to stocks, frankly speaking, Nandita, very few stocks are left. What I mean to say is, I think every stock basically has moved well, whether it's the Prestige or the Shobhas or the DLF, which normally DLF leads the entire pack. So I would be safe. I would play safe. I would pick DLF. Yes, it has moved, no doubt, but I think the setup seems promising, and that looks good. Even stocks which you like, Godrej, Oberoi Realty, or I think they all look good. So difficult to pick and choose, but yeah, I'd say probably DLF 1 and Oberoi Realty 2. Nandita.
All right, that's the view on the realty pack. But let's also shift focus to a Bank of Baroda. That's the stock of the day, according to me, given the fact that, RBI has stopped the bank from onboarding new customers on its mobile app. Now, this is due to some supervisory concerns that were observed in the way the customers were onboarded. But Bank of Baroda has assured that the existing customers will not face any issues and that it will, carry out corrective measures, to address RBI concerns as well. If you look at Bank of Baroda, I think the rally that we've seen in some of these PSU banks, I think a little bit of cool off from there, because if you look at Bank of Baroda over the last 5 sessions, it has lost somewhere around 2% or thereabouts. Now, this bit of news does come as a setback. So from here on, what is the next level that you'll be watching out for in terms of support on the charts?
We spent 4 weeks over here, Nandita. Frankly speaking, like you said, there has been a little bit of a cool off as far as PSU banks are concerned. It's also we are close to all-time high, so it's natural that we see resistance coming in over here. But if this results in a knee-jerk reaction or some sort of a decline, I would say buy into the decline, not an FNO buy, but a positional buy or a slightly longer-term point of view. Most of the PSU stocks still seem to be have decent juice left in them. There is headroom, upside seems to be there, and yes, so normally the stock is in an uptrend, Nandita. Something like this would just be an aberration. I mean, not fair to compare, but I think a couple of years back, HDFC Bank was stopped from issuing new credit cards for a year. MasterCard, because of some server issues, were not allowed to issue new cards for a year. So, I mean, it happened, but I think it would be a buy opportunity, frankly.
All right, that's the view on Bank of Baroda then. But let's talk about an escorts. Hemen, yesterday the stock was up 5 to 6% or thereabouts. There's a recent report from DAM Capital sees a 60% upside on stock going forward, even though tractor sales have been a spot of bother. But of course, the synergies from its merger with Kubota is something that the company will be focusing on and capitalizing on, and that, according to DAM Capital, will bode well. And in fact, this morning we have some CNBC TV18 exclusive source-based news that says that Nor Group could buy the railway business of Escorts Kubota. 60% upside is what DAM Capital is envisaging, somewhere above that 5,000 rupee mark. But where do you see the stock heading in the medium term?
I am not sure about 5,000, Nandita, but does not mean, I don't mean to say that it doesn't or won't happen. Seems a bit early for me to take that call, but if you see, we remain safely ensconced in an uptrend for multiple years, Nandita. Frankly speaking, as far as escorts is concerned, we are in a 10-year uptrend, and it doesn't seem to be in a mode to let up. So the setup is good on every time frame that you see, short term, medium term, long term, and even longer term. Escorts is in an established mature uptrend, so nothing much to worry about. Despite the one-way move, no negative divergences yet, no reversals, no signs of any impending reversals. In fact, yesterday is made a fresh all-time high, Nandita. So clear blue sky, no known resistance levels. In fact, it has just broken out of a 6-week consolidation phase. So I would be positive. 5,000 maybe, maybe not, but technically firing on all cylinders, ticking all boxes, Nandita.
All right, hold that thought. Hemen will come back and address viewer queries, with you. But let me also bring on board, Pankaj Kumar, who's a VP Fundamental Research at Kotak Securities, to take stock of the rally that we have seen in the realty space. Great to have you on the show, Pankaj. Good morning. The analog data has revealed that luxury homes have seen the most significant price appreciation at 24% over the past 5 years. Do you expect any more price increases going forward?
So good morning. If we see overall the demand environment in the real estate segment as such, so we have seen it's quite robust. And last 2 years, if you see large listed players which are present across segment, including luxury, has reported more than 40% kind of growth in the pre-sales numbers. Of late, we have seen the interest rate has gone up, but still the demand has been quite strong. Reason for the same is the demand supply. If you look at the overall inventory, it's for 1.4 years of the sales. Basically, that's what we have. And in the luxury segment, we have seen the quite strong demand in the markets like Mumbai or say Gurgaon and all. And the launch pipeline from the players are also quite robust. So looking at the demand and the launch pipeline that we see, the demand is expected to remain robust.
All right, demand likely to remain robust. But let's talk about prestige estates in particular. In fact, Bengaluru has been a major contributor to the strong performance in the previous quarter. But of course, we know that the company is making a foray or an aggressive foray in the Mumbai realty market as well. Would you say that there is phenomenal runway for growth from here, as the company, in fact, is poised to beat its FY24 guidance? We have a couple of queries coming in on prestige estates on our live feed as well. So any kind of target from a 12-month viewpoint going forward on prestige estates?
So prestige, we've been positive, but of late we have seen a quite sharp run up in the performance of the stock as well, which is largely driven by the performance in the pre-sales number that you rightly mentioned, and company is on course to achieve its guidance. But our fair value is 650, so it's currently trading near our fair value. However, looking at the launch pipeline that the company is having, the performance of the company is expected to remain robust. So we have to see how it will outperform the guidance.
All right. Last question to you, as you're running short on time. Valuations wise, how are these players like DLF and Oberoi Realty stacked up? Of course, we've seen a very good rally coming in on the realty index. The index itself is at a 15-year high and a 40% up move on a YTD basis. Do you think valuations-wise, there is room for more upside?
So valuation, as you have mentioned, the stocks have run up, and the valuation band that how we look at is the EBITDA on the pre-sales number. So most of these companies are trading on the upper end of the EBITDA band. So right now there is as far as the valuation is concerned, they are on the higher side. But the performance is, again, we have to see how it goes, because second half is going to be quite strong looking at the launch pipeline that we see from all these names which you have mentioned. And if there is a strong beat on their guidance and all, we can see that the performance may remain strong. And the second thing is, overall, if you look at, we remain constructive on the real estate space, including all these companies which you have mentioned.
All right. With that, Pankaj, we are running out of time. So thanks a lot for taking out time and joining in and sharing your thoughts on the Realty Pack from here. But let me go back to Hemen and talk about, some of the queries that are trickling in this morning. I know we've really spoken about realty stocks in depth, but there is one particular query coming in on Ajmera Realty from Debu K, and he wants to know your thoughts on this stock. Of course, it is at a record 52-week high or thereabouts, but here on, where would you see an Ajmera Realty heading? 500 could be a possibility?
Well, yes, Nandita, you took the words out of my mouth. 500 is a distinct possibility. It's, I wouldn't say underperformed, but it's lagged a bit. It's playing catch up. Why I'm saying this? Because many of the stocks have posted fresh all-time highs. Or if you look at the index, has posted multi-year highs. So many of the realty stocks have done well. Ajmera has started doing well. So I would say technically it is cheap. If it's below the high, if the sector is doing well, the index is doing well, the marquee stocks are doing well, something which you are getting below the high, I would term as technically cheap. So yes, 500 seems to be on the horizon and it looks good. Okay, yesterday we saw a 13.5% spike, but yes, we've been technically sound and yes, huge volume yesterday. These aren't delivery marking, but gross volumes are under the 31,80,000. And this volume is highest that I see for quite some time now, actually. Highest since, highest in a long time, Nandita, at least a couple of years. So, yes, Ajmera looking good and we are heading towards 500.
All right, hope that answers your query. The next one is coming in from Pankaj Kajalia, wants to know your thoughts on GAIL and Petronet. I think Petronet over the last 5 days hasn't done all that well. In fact, over the last month or so, it has lost somewhere around 10% or thereabouts. GAIL, on the other hand, yesterday it ended in the positive, but hasn't really done much over the last 5 sessions. How should one approach these two stocks from the oil and gas space?
I think GAIL one needs to take a slightly longer term view, Nandita. It spent 22 months moving the range between 83.50 on the downside and 114 on the upside. Okay, it's basically a slow moving stock. But after 22 months, it broke out, gave a throwback, and now we are ready to make further headway. Levels to watch 122, 114, resistance 130. And the all-time high isn't very far away, Nandita. It's at 133, posted in August 2018. So it's good, but once again, it's a slow-moving stock. It takes its own sweet time, so it's not going to run away in a jiffy. But yes, the setup looks good, and after 22 months, I believe the next few months or maybe a next year or so would be positive as far as the stock is concerned. Petronet LNG, like I said, not done much. We've been here for a long time, Nandita, frankly speaking, 4 years and counting, going nowhere. Even now, showing absolutely, there isn't a trending bias, Nandita. Be it sideways, it meanders aimlessly. There are a few ifs and buts where it tries to give a breakout, doesn't work out, not successful, and we are back to square one. So frankly speaking, status quo, going nowhere, and currently no technical signal that it's going to show some fireworks. Monthly close about 260 could be the first technical green shoots of an impending upside, Nandita.
All right. I'm afraid we have time for just about 2 more queries. So, Selvan KBB wants to know your thoughts on Mazgaon Dock. Of course, we know that after a stupendous rally, we had seen a bit of a cool off. But yesterday, Mazgaon Dock managed to make a comeback, 5% gains coming in on the charts. Would you advise investors to use these rallies to book profits?
I would say partial profit booking is fine, but the setup still seems positive. I would like, from a longer term point of view, looks good. Even I like HAL, Hindustan Aeronautics. So no signs of a reversal. I would say maybe you want to get your costs down, can indulge in some profit booking. Otherwise, seems stable enough, Nandita.
All right. I think the last query for the day, Mohan wants to know your thoughts on Navin Fluorine. Of course, there has been concerns over top deck exit, and the stock has of course been hammered out of shape. So Mohan wants to know if these kind of corrections that we are watching on the stock are offer great or good opportunities to buy into the stock.
Well, I'll answer half his question, Nandita. I don't track it fundamentally. He also needs to take a fundamental view on this. So I'll answer the half part, which is technical. I think if the stock is fundamentally sound, I think things like these offer a buy opportunity. Having said that, going by pure technicals, we're looking a bit tired. Lower top, lower bottom on the monthly charts. We walked into a correction of a greater degree. Not very surprising, Nandita. We've been in an uptrend for the last 10 years and counting. So some time and price retracement is always welcome. 3650, very strong support. Only if that breaches from a weekly point of view, would I be worried. Short term is getting oversold. I think downside does appear limited. Yes, 3650 cracks from a closing point of view on the weekly chart. I would say it would open the downside more, but I would say it's a correction. I don't think anything changes. But yes, keeping the quantum of the rise in mind, it would take some more time for stability to play out and for it to resume its positives.
All right, that wraps up our query segment for today. But Hemen, before I let you go, what would you be flagging off for viewers this morning in terms of stock picks?
Well, actually, there are a couple of stocks which look good from a intraday point of view, Nandita. First one is a buy call on JSW Steel. Stock is oversold. We've been down for 5 weeks in a row. Downside appears limited. Mechanical indicators on the early 2, early 3, early charts are given crossover by the hint of positive divergence also. So one can buy JSW Steel at 770, stop loss 760 for target 782. It's an intraday buy call. And the second stock, the logic remains the same, Nandita. It's Tata Chemicals. We're down for 6 weeks in a row and we're at support levels, bouncing back. This is a contra buy call, intraday point of view. Buy it at 1015, stop loss 1007, target 1031. This reward ratio 1:2. Nandita.
All right, those are the stock recommendations coming in from Hemen this morning. With that, Hemen, thanks a lot for joining us this morning. Always a pleasure chatting with you.
Same here.
Well, with that, we've come to the end of this edition of Morning Trade. But before I go, just a reminder, for viewers, fresh off a victory against Australia, India will be playing against Afghanistan today, and the match will be starting at 2 p.m. So I'm sure all the cricket fans are waiting with bated breath for India's second match in the World Cup tournament. With that, I'm out of the studios. Thanks a lot for tuning in. But of course, stay tuned because coming up next is Opening Bell.